All right, guys. Yeah. So in the previous video, I said I was going to start doing something, and I wanted to practice the strategy in across different markets, right? Aside synthetics, I know synthetics is more safe because it avoids news. So, but then I wanted to also show you guys that it also works in currency pairs as well, currency market as well. So, but then the difference is currency market, you really have to be careful. Like you have to make sure what you're seeing is what you're seeing. So what's going to happen is I'm going to pull up the rules so we could use it to do a back test on sorry, my chest is I don't know what is it that I'm eating. Yeah, give me a moment. So yeah, I'm gonna pull it up. Let's look at yeah, this pair. What pair is this again? This AUD USD for last week. Yeah, let's see what AUD USD did for last week. Where do I paste this in? Do I paste it here? Or I should paste it here. I think I should paste it here. Yeah, I think I should paste it there. So let's paste our rules. So this is the rule, right? Yeah, this is the rule here. So the good thing about pasting it here is it doesn't move. This is why I use this particular icon, the tool. Yeah, it's called anchored text. So when you switch time frames, for example, if I go down to 4 hours, it's still in that position, right? So at this point, um, yeah, okay. I just wanted to check if this thing was recording. All right, so we're watching what happened last week, and this is the line for last week, for the week. So we want to see if we're trading last week, if we would have made any profits or any money at all from the movement of the market last week and where market gave us entry, right? We wanted to follow the market to see where it gives us an entry format to, to trade using our rule. This checklist you see here is just the checklist for entry. Okay, it's not the checklist for the entire trading system, no, or trading strategy, no, it's not. All right, if you want to know more about the trading strategy or system, um, run over to my Instagram page and give me a DM. I would I'll reply you there. Maybe I may drop some video. I think I have some videos there, but I haven't started doing a lot of videos on a lot of educational videos on my Instagram because I have some technical things to sort out, right? So, but for now, just drop me a message on my Instagram, the same Josh underscore FX Pro, right? So I'll give you a reply and we'll talk about the rest. So for now, let's back test AUD USD for last week and what happened last week. So this is the last week candle. And already from weekly perspective, you see that market has been bullish, right? So um, we're backtesting it as though we're not seeing this week, or as though if we were to trade it, let's get information from market to see what we would have done better. Okay. So that's kind of like why I said it's a backtest. Okay, so what's going to happen? We probably will backtest this one, and we'll backtest this one. All right. So let's head into the markets. All right, at this point, market is still bullish. Before this week started, market is kind of bullish, right? Because it broke through this zone here. Sorry. Oh, sorry, I'm just a bit tired. This is 2 a.m., 3 a.m., and I'm still here trying to make some educational videos for you guys, man. I'm also learning, I'm also like refreshing my knowledge as well, learning on the job. I'm also doing this so that I could take more better trades. I could refresh my understanding on what the market is and different market conditions that play out. Because in currency markets, the conditions are wild, different from uh, um, different from the volatility market or the indices, the synthetic indices market, right? Synthetic indices is more of a coordinated because it follows price action. So it's not mostly moved by news. In fact, it's not moved by news at all, right? There's no news impact on it. It's just simply price action and smart money concept and some other rules too you have to put in there. All right, so at this point, we see market do a break of structure. It because it was still trending upward. Usually I would just draw a trend line, but let's just see from last week perspective. Okay, so since the break of structure is here, we now have a trading range. The range is between here. Sorry. Yeah, and here. So the range is between this point and this point. So, but the difference, what I have known currency market to be is if it was synthetic, we would look out for this other block here and maybe the this thing, yeah, but it's not synthetic. If you watch, it's this fair value gap here was so it was so invalidated by this particular candle. But since we're doing this, we're breaking it down to 4 hours. We've gotten a range on daily, and this is the full range. Before this week started, this is the full range, right? So in this full range, this was where we had a break of structure. I don't know if I should label it. Well, okay, I think I've labeled it. But the label will not be that bold. What's this? The label will not be that bold. Hold on, I'm trying to set it up. Just 11. Okay. So this was where we had our break of structure. So usually I don't come here to look for entries. Anywhere above here is kind of like what you call a premium zone or discount zone. I think they call it a premium zone, one of them. So I don't look for my trade on premium areas. I look for it on discount areas. Just give me a minute. I'm trying to walk around my trading journal. Yeah. So actually that's a premium zone. So above the break of structure point is my premium zone. Below it is my what do you call it? It's my discount zone, right? So any area of interest around this point is where I'm looking to take the trade. I could see some couple of there was a fair value gap here, there was a fair value gap here, there was a fair value gap here, there was a fair value gap here. So but then there was this big what do you call it? There was this big order block area here, which is this one, but market actually never got there, right? So if you look at it, this was it. Yep. So on the daily, that was what we had. Yeah, so I could just put G1 as usual. You guys know the way, you know the drill from the one that we used to do, right? Synthetic, from the synthetic pair that we used to trade. So all right, so aside this one, we have a fair value gap here. Then we have this other block here. Let's also, no, that's not D1. Sorry, this is 4 hours. Sorry, I made a mistake. 4 hours. I like to put the time frame so I know what time frame um area of interest did it get to, or did market come to hit before taking us out, right? All right, so I'll also label this 4 hours. Yeah, so if you notice, you see what happened here. So market got to this point out. So before this week, this market already did this, right? Tapped in here and left. So, but what can we look, if you're looking closely, remember the rule is Remember the rule, if there's a trending structure to the order block or fair value gap zone, that's your area of interest zone, wait for a break of structure before, or break of structure to the traded direction. Like after a break structure, then it has to break structure to your traded direction, right? So this is, if you look very well, this was our high. Our market trended there. There was a low, there was a high, there was a low, there was a high. What I mean is this. This is where it came from. Created a low, created a high, created a low, created a high, created a low, created a high, created a low. That kind of a thing. You get, even at this point, it created like two lows from this point. Right? If you look at it very well, if I change it to line charts, you will see. You see what I was talking about? So there was a low here, low here. So it trended like well into that place. There was a trending structure into that place. So I wouldn't take the trade if until I see like a break of structure. And if you look closely, the reason why here is a high, a lower high, is because there was this lower low here and it created this lower high here that went down, right? So we've been having series of breaks of structures. I'll mark it out like this. So get it. We had this one as well. Yeah, and we also had this one as well because market broke through this point as well, right? I'm trying to make sure it's okay. So yeah, so then if you look what happened next after market tapped in on this middle 4 hours order block range, we're not yet in this one. So we're looking at here. So after market tapped in on this middle 4 hours, hold on, let me change this color so it doesn't confuse me myself. Okay, so after market tapped in on this point, it went straight to break this high. See the break? Went straight to break this high. I don't know if you can see what I'm showing you. It went straight to break this high here. Yeah, so you have to, this is why I said in trading currency market with this strategy, you have to be really careful to see what you're trading. You get, yeah, you got to be really careful to make sure you're seeing every single thing. You're seeing the details because in currency market, it may be hidden in plain sight. It's after you've taken a stop loss, that's when you now see it. And it happens like that most of the time, right? So, but you have to really see it. So at this point, since there's a break of structure here, but we've not gotten a reversal and all of that, on a lower time frame, you could, this is last week. Maybe you could have seen an entry here to buy this market, but we're looking at this week, right? So having that in mind, we have this full zone here, or trading zone, trading range here. From here to this low that is tapped in this place. So I don't know if you could see what I'm showing you from this point to this high of the week, of this before this week started, right? So wanted to see what happened, or how, if we were to take this trade, how we're going to take this trade. We already had a trading range as at this week. I don't know what day of the week that this one came in. I think that was on a Tuesday. Yeah, Tuesday. Yeah, Tuesday was on a Tuesday. So we had this trading range all the way here. So if we break it down to 1 hour to see what happened. So okay, it was on the day that it started. That was when we had this push. News had to push this upward to, do all of that. So, but we had this break here, right? This is why I said I don't trade um, the market. Like I don't trade, how do I put this so you guys will get it? I don't trade, we already have a zone. I don't trade above, like on my premium zone, like above the break of structure points. This market clearly broke at this point. If I put it here, it didn't really show a break per se, but yeah, but well, it did sort of. Okay, yeah. So market broke clearly at this point. So anywhere below this point now to the downside, anywhere below this point to the downside is where I'm looking to enter my trade from, right? I'm looking to look for my area of interest from. So, and if it also, the rules still apply. If it trends down to that point, I'm not entering until I see a break of structure, a clear break of structure. So if you notice, anywhere below here is where we'll find our order block and all that order block, what do you call it? Fair value gap, all of that. So we had another block here. We had another block here, which markets kind of invalidated, right? So this is why you have rules. You see, market invalidated it by doing this thing now that I did. This is why you have rules. Rules keep you from losing in the market, right? Rules keep you from losing in the market, right? So this your 1 hour order block here was cleared. If you are taking this other block too, it was also cleared. So if you notice how market came and picked, there was a fair value gap here as well, but it was also taken out. It was also invalidated. But market came down to pick this other block here. This other block here, right? This one, yeah. This other block. Perfect. Market came down to pick this other block here. Yeah, on a 1 hour. So this one was invalidated. I'm just gonna take it off. Yeah, this one was invalidated. This one was invalidated. This one was invalidated. The reason why you're not entering these ones now is because there is a trend. It trended to that place. So because when it's a trend, the normal basic rule is whenever market is trending downwards, do not trend, do not trade opposite the trend. Do not counter trend, except you know what you're doing. Do not counter trend. It's better to be safe than sorry, right? Except you know what you're doing. But at this case, in this strategy, right, stick to what works for you. Stick to the rules, right? So at this point, there's a trend, and each trend created a high. Each low, there was a high. For each low that was broken, there was a high. So this high wasn't taken out. This low was broken. This high wasn't taken out, or this high wasn't taken out. So until we had this. So one of the rules is we have to have 2 to 3 rejection confirmations on the order block or fair value gap area, right? The rejection could be a full pattern rejection, like a full structural rejection, or it could be candlestick rejection, weeks rejection, right? So we had this, and also look out for a candlestick pattern. Remember, this is one of the distinct when you start trading, make sure you trade on your reversal candlestick pattern. Look out for reversal candlestick patterns. So we had the first rejection here where market gave this week, rejected, came back again, gave this long week, entered into the zone very well and rejected, right? Came back again, gave this week, tapped on the beginning of the zone and rejected fully upwards, right? At this point, we have this structure already. At this point, we now have this structure. This structure is what they call the star, the candlestick star pattern. You call it morning star, you could call it evening star. I don't know. I think this one is the morning star, right? I think this one is the morning star. Yeah. So after you see this star with all this rejection, your best entry position for this pair on Tuesday by what time again? By 5 in the evening, 5 p.m. in the evening. Your best entry position would have been here after the start, because this full candle like enveloped all these candles here, right? Like it just took everything out, cleared that zone, and that showed you that with the rejections, buyers are coming in. Then with the push and shift of that long candle showing that way, it means these guys are no longer coming back to that point. So at this point, not usually for my strategy, I do 1:3. But if the market is still moving and I'm doing like a level count, then I could do 1:4, right? But at this point, we'll do like 1:3. So at this point now, your stop loss usually should be somewhere below the full structure. But because you see this whole rejection, we are sure that market is not coming back here. So I'm going to just put it just below the ceiling of this other block, just below the floor of this other block, right? Just below the floor of this. I don't know what to call this. Is it ceiling or floor? However it is, anyway, you shall know what I'm talking about. It's here. So below this line, below this first line of the other block, right? I'm just putting it below there because it's kind of below the candles and it's below the structure, right? So it's safer at that area. So your entries here and you do your 1:3. If you watch, this market gave you a clean 1:3 before it got to this last high of our trading range. And this is on a 1 hour. All right. A clean 1:3 was gotten here. At this point, that was by 8 o'clock in the next morning, your trade had already played out. All right. So by 8 o'clock, you're already in profits. It has done your 1:3, 8 o'clock by Wednesday. Yeah. So this is how I take a trade for the week. I don't overtrade. Once I take one trade for the week, I maximize my I maximize that trade to put in everything I got in that trade. I'm not saying I don't apply risk management. I do apply risk management a lot of times, right? But then take what you know that if you take for the week, you could rest, you could lay low until you see another very profitable trade. So this is just to show you that this market do work on AUDUSD, all right, on currency pairs. This strategy do work on currency pairs as well. It's kind of like a strategy that works across different pairs. You could use this to day trade. You could use it to swing trade. I use it most of the time to swing trade, especially on synthetics. All right. So this is what we have for this. I hope this really gave you some education. You could use this education you're getting here now, take down some notes, write down some checklists, and go into the week, this coming week, go into the coming week with um this what do you call it, these rules or these things, right? Go into the week with it and trade better, make better money. Don't over trade, don't over risk your account. Make sure everything is on point before you enter the trade. All right. So see you guys on the next backtest video because I'm still going to do some couple of more Forex pairs backtest videos as well. So see you guys in the next backtest video and ciao for now. By the way, if you haven't subscribed, please do well and subscribe. Turn on your bell notification so it will let you know whenever I post a new video. And also drop a like, drop a comment if you like what I'm doing, if it blessed you, if it makes sense to you. Please drop a comment and let's push it forward. All right. Let's keep doing this. All right, guys. If you have a question, ask me in the comments. If you want to chat me privately, go to my YouTube, go to my Instagram or TikTok. However, same name, same place. I'll see you guys in the next video.